Okay, I want to welcome everyone to tonight's workshop. My name is Benga Gunjimi. I am the founder and executive director of the Nigerian Center. I want to start by saying that this meeting is being recorded. If you object to being recorded, you may disconnect at this time. That said, welcome everyone once again to this tax workshop today. We have um, Mr. Edward Somori as our speaker today. Is the CEO of Vantage Loans Finance Corporation. It's a all services firm that specializes in access to capital, mortgage, as well as taxes. Um, the corporation is one of IRS accredited acceptance center in the Washington, D.C. area. And it comes from the financial institution, and he has dedicated his life to helping folks in our community collapse the gaps of financial inclusion. So we are so thankful that he accepted our invitation to come back again to speak to us at the Nigerian Center. So what I want to do today, before he comes up, is to tell you a little bit about the Nigerian Center. Nigerian Center is the immigrant community center for the Nigerian American community in the United States. We are the very first of such across the country. And we are so proud that we're able to serve not just Nigerians, but all immigrants and all minority groups and anyone who come through our doors or pick up the phone to speak to us. Our mission is to foster financial inclusion and social justice opportunities for members of the Nigerian American community while providing access, connection to the Nigerian culture in the United States. At this center, it becomes important for a lot of folks coming into a new country. Even Americans would say the country system could be complex, let alone for someone who just came into the country to navigate and just kind of participate in that American dream and American experience. And that was why we exist. So to really undergird and make this program's mission come to life, we've identified a few areas of asset building. We have immigration programs. We have a walk-in immigration clinic in Washington, D.C. We also provide the same service virtually. It's a free service to walk in. We provide legal advice, consultation, representation, in some cases, even full representation. There's a small fee of $50 for the virtual service for those who are out of state. But for the most part, it's low to no cost to those who've come through the program. We have access to capital program. We have a micro lending program that provides loans, collateral-free loans to folks, whether they are documented or not documented, because we know that entrepreneurship for several of us in our community is a pathway for American experience and dream. It's a survival strategy. It's the only thing for some of us realistically can do. So we try to provide capital for that to happen. We also have home ownership programs. In the coming weeks, we'll be making an announcement for some financial down payment assistance in addition to what your state might provide you. So this is coming from philanthropic capital for those who are trying to purchase their first home. We have cultural programs, we have language classes. I want to talk a little bit about some of our upcoming programs. Next week, we have a free virtual screening of a very important documentary that tells the story of 3 families from Nigeria, Congo, and Guatemala, journey seeking asylum in the United States. So we are screening this with an organization called Find Help. We are going to be making announcement for legal resources, not just who are going through the path of humanitarian-based immigration, but anyone who has any family member and anyone in the network who need to speak to a lawyer regarding immigration. We hope the stories of these individuals who are graciously accepted to tell their story will just kind of give some form of comfort to those who might still be navigating that process. And know that organizations like the Nigerian Center or like the Welcome Center is available to be of service. We are still accepting applications and registration for our Igbo class. Language classes is going to start next week, Tuesday, February 7th. We are so excited about that. We still have some space available. The program is discounted at $99. So if you go to our website, you are able to register for this class. We just announced our Yoruba class as well. That was announced yesterday, and we are still accepting registrations for this classes programs. The website is nigeriancenter.org/Yoruba for the Yoruba classes and /Igbo for the Igbo classes. But if you go to our events page, you'll have access to both programs. Quickly, I want to talk about opportunities to get involved in the work of the Nigerian Center. First thing I want to say is that this recording for this particular workshop and of our previous recording will be available on our website on demand. It's free to you on our website on the media. You can access the recording of this particular program, as well as our other programs that we've done. Most of the time when we get inquiries, there are videos that actually speaks to that. So I'm going to also refer you that as a resource page to learn more about the work of the Nigerian Center. Volunteer opportunities. We are getting a few volunteer opportunities application. Bear with us with our response, but please free to reach out to us. We ask that you include your resume and a cover letter and be more specific area you want to contribute to serve. Also on our website, /serve, there are specific opportunities. We are accepting applications for teaching assistants, for Igbo, Hausa, Yoruba classes, our financial programs, our program managers for our immigration programs, home ownership programs, right now also event coordinator and community liaison officers. Everyone should volunteer in some capacity, whether it is as an ambassador to just get the word out, letting folks know that Nigerian Center exists. We have community partners that we meet periodically to talk about our programs and also conduct some listening sessions where you tell us pain points in your community. Community leaders for us is anyone who has any form of touch points to immigrant communities, whether they be in media, faith-based organizations, cultural, professional, business, policy, whatever touch points you have, please reach out to us. And you can go to community partners. It's a very short application form to fill out. If you're not following us on Facebook, Twitter, LinkedIn, Instagram, YouTube, please, you can do that today. And if you particularly want to help us to invite folks to follow us and also repost and share the programs that we have, that would be fantastic. On some platforms, we are Nigerian Center, and some we are the Nigerian Center. Facebook, Twitter, LinkedIn, Instagram, and YouTube. Financial donations, if you have not yet given and financially donated to the Nigerian Center, this is my appeal to you that you consider doing so today. With the exception of our lawyers, the entire staff and team of Nigerian Center are all volunteer. They also donate in addition to service as well. Your financial donation is going to go a tremendous way, not only to keep our lights on, but to keep the impact that we create in the community alive. And oftentimes when people hear opportunities to donate, we're quick to think about that our contribution will not make a difference. Trust me, it's going to make a significant difference. For those who are not able to volunteer, your money can definitely create significant change. So it's nigeriancenter.org/donate. I should also add that we have 501c3. Donations are tax deductible. We know you give to several organizations. I would just want to ask that you consider to become a recurring donor for a couple of months. You can set it for 2 or 3 months and decide to keep it on or not. But your donations is going to go a long way. Also, if you want to invite us to your organizations to come talk about Nigerian Center to your synagogue, mosques, churches, cultural groups, parties, the mitzvahs, wedding, all of that, we are going to go there and talk about the services that we have so people can know about the services available to their community. That said, I'm so pleased to bring to the microphone and bring to the camera Mr. Edward Somori. Welcome back again. Mr. Edward, I'll stop sharing my screen and the floor is yours.
All right, I think you can see me right. Thank you, Benga, for the work you are doing and for bringing me here again today. This is, I believe, good timing, considering the fact that we are in that season of the year where we have to deal with IRS in terms of what we made and what we paid taxes on. Again, my name is Edward Somori. I run a financial services business here, and I focus mainly on mortgages and taxes. Let me call it wealth building. I'm saying let me call it wealth building because in my prior life I was a licensed rep. When I say licensed rep, which means I could help you with financial planning, including trading stocks and all of those things. When I worked for Citigroup, well, now I no longer do that. And when I was leaving, I did sign, although that time has expired now, a non-compete agreement with Citi. So I had no choice but to go into an area where I won't cross the boundary to do anything that I could get into trouble for. So I decided to channel my wealth building career in mortgages and taxes. Of course, you know, taxes, they say whether you are alive or dead, you have to pay. That's the rule here in this country. I don't know about other various countries, but here in America, tax, they say death and tax are a must. So you will pay one way or another. And as business owner, which I believe most of us here are, we want to see the most effective way of, one, keeping the law, and two, making sure that we don't pay more than we have to pay. So that way you keep most of your money that you make in your business with you. That is why I chose to focus on these two areas, because what other way do you have to build wealth in a country like this other than real estate? So that is why I am in the mortgage business and as well as the tax business. So that's a little about me. I'm sure Wenga will leave my information in the chat, or I think my information is already there at the Nigerian Center somehow. So if you need to talk to me after this, you are definitely welcome to. Now, I want to, what I plan on doing is just give you maybe 5-10 points on preparing for your tax season. And, I call it tax planning. And, what can you do and what can you not do when it comes to tax preparation or planning? What can you write off? What can you not write off? What are the new updates that you can take advantage of that can reduce your tax liability and help you to be prudent and efficient as a business owner? Because I believe we are all doing a great job as business owners when you even have that courage to step out of that 9-to-5 job and decide to go out on your own. Or perhaps you're still working for someone, but you have a side business, that you're doing. You must know that in the United States, if you are living, you're alive and you are here, you have to pay taxes. I said that earlier. And your taxes, you are taxed on your global income, which means on the income you made, whether here in the US or outside the US. It is global income. So the fact that, oh, I made this in Africa, so it's not part of it, in the actual sense of it, is not right. So I just want to put that out there. So my goal is to give you some tips that will keep you in your business and legally be able to deduct the things you are supposed to deduct without getting into trouble. General misconception is that, oh yeah, if I have a business, I can write off everything. Even if my child is going to, I go to the bathroom, I write it off. I go to the restaurant, I write it off. Is that really true? The answer is no. There are some things you can write off, you should know them. And there are some things you can write off, but you need to take extra steps and you should know them. But I think the biggest thing is having your financial house together, keeping a good record of your business activity. And that is the number one area that most business people fall short of. We commingle our business and personal funds, and when tax time comes, you just say, oh yeah, I know, I think I spend. And in my practice, most people, it's when they come to my office, they start saying, oh yeah, I spent that one. Oh, wait. No, it shouldn't be. You should have a plan in place that should work for you from day one. Why? Now, a lot of immigrants who are business owners during the pandemic, when the government gave billions of dollars, this group of people that actually and really needed this money couldn't get anything because their financial house was not in order and their taxes are not up to date. So that takes me to the question, why should I file taxes? You should file your taxes or have a sound accounting or bookkeeping program in your business, because one, if there's any time the government is giving incentive to small businesses, they will need your taxes. And if your books are not in place or you have not been filing taxes, then you will lose out. Case in point, COVID era, a lot of businesses lost out. Number two, you're growing, your business is expanding, and now you are really ready to do the big thing. You want to buy equipment. You want to buy a building. You need the loan to expand your business. And yes, you are doing very well in practice, but on paper, we don't have anything to show. Nobody's going to give you a loan. And that expansion will not happen. I had a small business guy, a young guy doing excellently well, came to me, needed to buy some camera equipment. And this equipment is only going to cost him $85,000. And of course, why use your money if somebody else can, finance it for you? But he didn't even have the money anyway. And yes, he needed the help. He could not get the help because his financial house was not in order. So we could not help him. He couldn't get the loan. The bank couldn't get the loan. He went to the bank referred him to me. He came to me, and nobody could help him because we need to see what you're doing. Now you can tell me, oh, I make 10,000. I make 10,000 every hour. But until you report it to the government in taxes, I can't take your words for it. If I'm going to give you a loan, I'm going to, like we say in Nigeria, hammer you. So you need your financial house in order. And that, at least those two reasons should tell you or help you to understand that, yes, you should file your taxes. Apart from going to jail, you have some benefits when you do the right thing. Okay. Let me quickly run through a few points that I said I was going to just run through as some of the deductions you can take, or some of the things you should plan to put in place. At least this is the beginning of a new year. Let's even agree that you've not been doing it, but you can do it now. You can start now and start the year keeping, doing the right thing and knowing what you can and cannot write off. I'm going to go through maybe 10, if time permits, 15 or 13. Like I said about deductions, oftentimes people say, oh, I can deduct everything. And sometimes people are afraid to deduct the things that they can legally deduct as business owner, just because they don't know what they can or cannot do. Number one, that you can do. I start with business meals, because that actually the law just changed. Prior to Trump, you were able to deduct whether it's 50% or 100%. And then when Trump came, Trump capped it to between 30 and 60% when the law happened. And when Biden came during COVID to help small businesses, he now said, yes, you can deduct 100% of your business meal and entertainment, which means, say, for example, if we were hosting, if Benga was to be hosting us, and he decided to either take us to a restaurant to do this, or right there in his office, decide to entertain, buy all sorts of things, or cater food in, he could deduct that as a business person. I'm just using him as an example. As a business person, 100% of his expense, instead of capping it at between 30 to 60%. And so, which means if you take me to a restaurant to discuss business and you feed me there, my food, your food, you can deduct 100%. Now, the only rule is this: keep your receipts. And if you're claiming 100%, document on the back of the receipts the business meeting you had at that restaurant, at least what you all met to discuss tax planning. Document it there on the back of that receipt, and please keep it. it's not like IRS needs that receipt when you are filing your taxes, but in case somebody questions, you have something to back yourself up and you can legally do that. Now, the other thing is cell phone bill. These are just common things that, sometimes, oh, I have my phone. And can you deduct your phone bill? Yes. Your cell phone bill? Yes, you can deduct your cell phone bill. But because I have a cell phone, for example, and Benga and I, each time we talk and want to talk business, he calls on my cell phone. So I can deduct a portion of my cell phone bill. Does that mean if my cell phone bill is $2,000 a year, I can deduct the entire $2,000? Not necessarily so. You have to figure out what percentage of your bill is for business, or what percentage of the time you use your phone is for business, and you can deduct that percentage, divide your bill between the business and the personal, and use that percentage to and write off the business portion of the expense. And same thing with equipment. Equipment like your laptop, your cameras these days. These days, a lot of people are doing businesses on, they are promoting their business on TikTok and YouTube and, all this other social media. If you invest money in buying those things, you should be able to expense them or depreciate them off of your business. So you should be able to write off those things. And you should know equipment, usually you have a period of 5 to 7 years of depreciation of most of your equipment. And so you should, but one of the things that we have, again, because of the enhancement that the new administration has added, is a bonus depreciation. And I will talk about bonus depreciation later. Another thing you can do, or you can write off. So Benga was talking about donations to Nigerian Center, for example. But besides that, you can also write off your licenses. So for example, if you are here and you are a realtor and you spend money on licensing and all of these things, yeah, whatever you spend on licensing or on subscription, you know how you subscribe to the websites where you generate leads or where you write up your contracts, you can write those off. Those are tax deductible. And of course, I need not tell you your office furnitures and fittings and all of that, you can write them off. You can write them off either by depreciating them over 5 to 7 years, or you can write them off now, taking a bonus depreciation. Now, even if you own the equipment or furnitures prior, you can still take advantage of the bonus depreciation that is on now. And then, I'll tell you more about that. Well, I can just tell you now. You can take bonus depreciation of whatever is left, or if you don't even have idea the value, you can go online and look for what we refer to as the fair market value, and whatever is the remaining, or the remaining value, or the fair market value of that, you can decide to take a bonus depreciation of that and write that off. Now, bonus depreciation is a good thing, but does not mean there is a time that is good. It may benefit you. There's a time that it may not benefit you. It depends on where you are in your business. Say, for example, last year, our business was so good and you made over $1 million, and now you're looking for ways to write off all of this expense, and you don't know, you've done all your expense, and you're still having a huge profit, money left over. Then bonus depreciation can come in to help you reduce that. But If, say, for example, your business didn't really do well and you made, say, 40,000 and you have a car and you think, oh yeah, they said bonus depreciation and my car is 60,000. I want to write it off. That will not be a good use of bonus depreciation. So I hope that is good. So of course, things like your car, if you use your car for your business, you have two ways of deducting that. And I always run into this when people come to my practice and they ask, oh yeah, I buy gas and I travel to so and so every day. So I put a lot of miles on my car. So the rule is this: you cannot double dip. So if you have a car or you use your personal car for your business and you want to expense the use of the car, you can deduct that. However, you will have to make up your mind if you are doing mileage or you are doing actual expense, which means if you actually buy gas and you go to the mechanic and all of that, you want to keep those receipts and do the actual expense or maintenance, or you want to take the mileage option where you have 56 cents to a mile and you can then track your miles and deduct the miles. You cannot deduct the miles and then bring in your gas receipts and also deduct those. But that is different if your business own a car, or you bought a car in the business name, and as a business owner or as a CEO of your business, yes, you are allowed for the business to buy the car that you drive. Now, if the business owns the car and you're depreciating the car over the number of years, that is fine. Does not mean that the business cannot still be fueling the car. But in that case, you're taking actual expenses because the business owns the car. You won't now come back and say, oh, I used my car for business. Now I want to do mileage. At that point, you have to take your actual expense. Now, I want to talk about travel, which is very tricky. People say, yeah, I own a business and, I'm going to Florida on vacation and I'm going to put it on my business. Okay. Now, can you actually do that in the actual sense of it? No. But are there areas or ways where you can do that? Yes. How? So, say for example, I have a business deal in Florida, meeting in Florida, and the business meeting is on Thursday. And I'm going to Florida on Thursday. And maybe I'm meeting the person Thursday, Friday. So I went to Florida. I did the business Thursday, Friday. And then I decided to go to the beach to enjoy myself Saturday, Sunday. Sunday evening, I fly back to Maryland. So now I'm home. Can I deduct my entire stay in Florida from Thursday to Sunday out of my taxes? The answer is no. I can deduct my stay in Florida Thursday and Friday, which are the actual days I spend there, or the working day or business days that I spent in Florida. So I can deduct those 2 days, my hotel, my whatever, but the other portion I will have to allocate to my personal expense because it's a weekend and I stayed to enjoy it myself. Now, given same scenario, I'm in Florida for business and I stay Thursday, Friday, Saturday, Sunday, Monday, and then fly back either Monday evening or Tuesday evening. Given the same meeting, same scenario, but this time I came back on Monday evening. I can deduct my expenses my hotel, whatever, from Thursday to Monday or Tuesday. Why? Because I can't claim that I still had business dealing on Monday, which is a working day. And it is because of the business dealings that I had that kept me in Florida for the weekend. And whatever I did with my weekend is fine and good. The business can still put my hotel bills and my stay. I hope you get the understanding of what I'm saying. So it's just these little things that makes you in or puts you in the bucket of avoiding or evading taxes, or you're being smart to how what you do or don't do with your taxes, whether you get in trouble with the government or you do well. Are you avoiding or evading taxes? So evasion of tax is a felony, but you can legally avoid to pay tax by doing these little things. So that's why I'm bringing those terminology and the language. So when you do this, it's not like you evaded paying your taxes, but you legally avoided paying on some of the things or reducing your taxes or the amount of tax that you're supposed to pay. I hope you understand what I mean by that. And of course, whether you have people working for you or not. Now, oftentimes, this is one area that people don't always understand. So I'm a business owner and I have kids. This is another trick of how you can say, okay, I own a house or I eat food at home. How do I make my business pay for my personal expense in my house? Can I do that? Technically, no, but technically, yes. How? So you own a business and you have children that are at least 13 years old or more. I think in some states they even allow up to 10. And they can do something in your business, even if it means to help you organize or file stuff. You can legally put them on payroll, or you can pay them money. And you are to decide what is a reasonably fair amount to pay them. So you pay your child, then the money comes home, you do whatever you want with the money, and that money still becomes a write-off on your business. So that way you can technically fund your home expense this way. Give them a job in your business, let them do one or two things, pay them, and then write that off. Just like you are supposed to pay yourself as well. So 714, still have a couple more things, but let me leave those there. These are just basic general things, and tell you again, Binga and I were talking earlier, and he was saying that for some of us are in the country and we are probably not documented, and we say no because I'm not documented, or I don't have, and I'm making money, I don't have to pay tax, or I'm documented, but oh, I have ITIN, and since it's ITIN and it's not a social security number, I should not be paying taxes. Well, you should pay your taxes, whether, as long as you're making money, you should pay. In fact, the IRS recognize and they want you to pay. That is why they created within the code what they call individual tax ID number. Now, they know that the social system might say, oh, you are not documented, you don't, we are not giving you social security number. The IRS still want their money. And that is why when you are here, and in fact, in most cases and in most states, they allow you, once you have to, one, apply for ITIN so that you can pay your fair share of taxes and be able to participate in some of these things, the privileges the states you live in offer. For example, if you live in the DMV area, you do know that whether you are documented or not, you can drive. And in the state of Maryland, for you to drive, the state of Maryland says you must, number one, have an ITIN number, which the IRS will happily give to you. And my office, again, is one of the areas where we are certified with the IRS to help people get that. And Maryland wants you to have that and file 2 years taxes, and you can get a driver's license or a state-issued ID. So, because they don't want you to be on the street, because they know whether you are documented or not, you're still driving. And they don't want you to hit somebody as an uninsured driver where something happens, but you have no insurance, and then it becomes a liability on the person or the state. So they want you to participate in all the things that can, give the American dream. So, case in point, you should, if you don't already, you should have it. And now, for those of you that have ITIN, one of the other reasons why you should file often is each time you file, it puts you in the system. And as you know, ITINs are not like Social Security that are forever. They do expire, and you will have to renew them. So if you don't file, then you may drop off the system and your number may have even been canceled and you may not know. Okay. So I know I've talked a lot, but let me leave it up now for questions. And I know Biggie and I talked about the format this was going to take, and will allow you guys to ask your questions, so that way it will help us to maybe delve into some of the areas that I have not delved in. I really just wanted to focus on this is the tax seasons, and these are some of the things you can do to get yourself ready, and to also, as a business owner, get yourself ready for the year in preparing. You start preparing now for next year's tax season. So questions.
So questions are coming in the chat box. I'll be reading them. So please, if you have questions, please chat your question in the chat box. If you want to ask your question about the phone, you can use the raising up your hand option, and I'm going to call you to come to the microphone. But the two questions we have here is, can you confirm the age is 13 years old if you want to make your children to be in your business? And the second one, if you registered your company in June 2022, when do you file taxes? I believe if you registered something last year, when would you file taxes this year?
The first question, if the age is 13, some states, but the general rules, 14, if they are 14 and under, they can only spend a maximum of 16 hours. So let's say, make it general. Some states will allow lower, but general rule, 14 years old. And then if you register your business in June, when do you file your taxes? So you have two options. So you can either adopt a fiscal year or calendar year. So if you were doing calendar year, then whenever you start till the end of the year, which is December 31st, then you file tax for that portion that you worked. If you're doing fiscal year, then it is June to June. But for a small business, I'm sure you don't want to adopt fiscal year. You want to do calendar year so that it will be easy for you. So my advice, still fine, even if you register your business in November, and this is a new year, please file your tax. And you should know, depending on the state you live in, it's not just the income tax you have to file as a business owner or someone who has a registered business. You still have to file what is called personal property tax for your business. And without filing that, your business will not be in good standing. If you've ever gone to your state to check the status of your business and it says you are not in good standing or forfeited, it's because you have not been filing your personal property tax. And most people don't know that. And that is different from your income tax.
Jordan, you can unmute yourself. And let me see if I can do that for you.
Hello?
Hello.
Yeah.
Yes, hi. Okay, the personal property tax thing is actually very interesting. I wonder if you could expound upon that a little bit. But I have a couple of questions also, in addition to that. The first is, I think I know the rule for this, but I just want to be clear because I think some other people may benefit from this. Can you speak about the home office deduction, number one? And number two, can you also speak on estimated quarterly tax? Because that is something that is really tricky to me. And like when you have to file it, like if your business is not making a lot of money, like if you necessarily have to file it, because I think there's some limits on when you may have to file it and when not, like a limit on the amount of profit. So just wondering if you could speak to those things as well. Thanks.
Okay, so let's talk about the home office. So yeah, I know that's one other area where we always talk about, yeah, I do business at home, so my whole rent I can deduct, my whole mortgage I can deduct. The answer is no. You can deduct a portion of your home if you do work at home, including the utilities that you incur in your house if you do business at home of your business taxes. Now, how do you go about that? The IRS rule is you have to know, you have to, number one, have a dedicated place in the house that you use for business, that is set aside for business. Like if you have a study at home and you have your study set up and you do business there. So yes, you can deduct that. How do you deduct that? You have to figure out what is the square footage of your entire house and figure out the square footage of the place you have set aside for your business and take the percentage of that set aside business location off of the rest of the house and off of the rest of your utility bills, and those are what you can deduct, not your entire rent or your entire mortgage. I hope that is clear. Now, let's talk about estimated quarterly taxes. I think the best way for me to explain that is, we just talk about estimated quarterly taxes. The number one thing is, should you be paying estimated quarterly taxes? Should you not? Should, as you know, if you're a sole prop or an LLC owner, there is something called self-employment tax. And if you pay self-employment tax, that covers your own, portion of your personal tax, your contribution to Social Security, and all the FICA, yada, yada, yada. which if you were a W-2 employee, those would have been getting deducted from your account. Now, you are not a W-2 employee, you are self-employed. When you are filing your taxes, you do pay self-employment taxes. Now, if you pay self-employment taxes, do you want to be paying it quarterly, or do you want to wait till the end of the year when you file your tax? It will automatically come out of your schedule. See? So you will see it there. It's something you have to weigh. But then, if I'm an LLC, should I remain LLC to continue to pay self-employment tax, or should I actually convert to pay withholding taxes and all these other taxes that corporations, say S Corp, pays? It's something you also have to determine. My role is, if you're not making, like you said, you're not making a lot of money, your net income, which means income minus all your expense, your net is less than 20, 30, 40,000, I will just pay the self-employment taxes. But when you are getting over that, and you say you're getting over 50, your net income is hitting 50, 60,000, I will convert to an S Corp and pay myself. And that way, whatever I pay whatever withholding is deducted or is kept, I remit those to the government. Now, if you want to estimate by yourself, depending on what you're making, if you're not making much, then again, I won't bother. But if you're making money, you can determine that, okay, based on what I'm making, I want to estimate 15%, 20%, 35%, so that it will also cover your own taxes, so that at the end of the day, instead of owing, you already have excess. But for me, as a business owner, do I want to give IRS my money to hold for me while I'm struggling to look for money to do business? My answer will be no. So I want to give them as little as possible and hold as much as possible to me. So my short answer is not just quarterly taxes. You don't just pay quarterly taxes because they say quarterly taxes. You have to, it has to make sense in the amount of net income you are making, whether as a whether you should just pay your self-employed tax, or you're thinking, paying my self-employed taxes will be too hard for me at that time, so let me pay my quarterly tax now to reduce the tax liability at that time. So if you want to do that, then you can pay 15.36, or just make it 15.5 approximately of your income. That will cover your FICA, both your own contribution and the company's contribution. You can calculate that of your income every quarter and pay that. I hope that answers your question.
Excellent. So we still have time for more questions, but one or two more, please chat them, or you can come to the microphone. Questions, I believe this is Judith. How do you determine the amount per hour to pay for the child if you want to involve them in your business? I have an e-commerce business on Etsy.com and customer pay taxes. How do I determine if those taxes go to my specific state?
Oh yeah, if you do business in your state and customer pays taxes, those are not yours. Those ones, yes, you have to total together and pay on a quarterly basis. So whether sales tax, especially the e-commerce people, you realize that the states, whichever state you do business in most cases, they will tell you, or you will see when you are buying things online, oh, the state of so and so charges X amount of tax. And you set that up in your online shop online, whatever, and make sure you collect that tax and you put them, whatever you collect, you send to the state. Is not part of your income. You send to the state on a quarterly basis. Now, how do you determine how much you pay your child? It's your business. You make a decision. But again, like I said earlier, it has to be something reasonable. Now, how do you define reasonability? The only way I can explain that is this. So I have a business and my total monthly revenue is 10,000. And by the time I'm done deducting all the expenses, my net income is 2,500. Will it be reasonable to say I pay my child $2,000 or $2,700? I can't pay the money that I don't have. So I say, whether your child or yourself, as you of course, you can pay yourself, whatever you want. But of course, even with yourself, you can't pay the money you don't have or you have not earned. So if you want to pay your child, let's say I have 10 kids and I want to put all of them on payroll. I don't think it will be reasonable to say I'm paying to them more than, I'll put them maybe 30 to 40% of my net will be reasonable. So it's really something for you to determine what reasonable is. But IRS will sit with you and say, is this reasonable? So I'll leave that definition of what is reasonable to you.
Excellent. So do we have one more question? Please unmute yourself. Yes, Roland, you can unmute yourself.
Oh, we cannot hear you, Roland.
Unfortunately, we cannot still hear you. No, we cannot hear you, unfortunately. So if you can chat your question.
Okay.
Okay,
wait, we can hear you now.
You can hear me now?
Yes, we can.
Yeah, my question is, if I'm raising president of the National Association of Blacks in Solar, and if I pull together, we are 501c3, but I'm not compensated for my time, but we have in this past year pulled together a collaboration group where we invested about $8,000 for a grant writer. We went after a $19 million grant, which we were unsuccessful getting for workforce development training. My company is a registered LLC. How can I take advantage of the time invested and the monies that we may invest in those type of business collaborations?
So you have a not-for-profit organization. So whatever time you spend on any business or work related dealing with that not-for-profit is considered a volunteer time. And just like if you donate money to a not-for-profit, you can write off that money. Same way, you can write off your time. You can give your time value. And as long as you can track it, that, okay, I work X amount of hours a day, and normally in my job or in my role, this is a reasonable amount of pay that the people on this roll in other for-profit company get, you can allot that amount to yourself and also deduct it because it's earnings that you are supposed to earn that you donated as a volunteer. You can write off that donated hour, the equivalence of it, in your taxes.
I think also in this case, they had hired a grant writer and also paid money to this grant writer up to $8,000. I wasn't too clear if the for-profit paid the grant writer or the nonprofit paid the grant writer. Can they also take deductions from, Mr. Rowland, if you want to clarify the grant writing piece?
Who paid? Is it your LLC, the LLC a for-profit company?
Well, the LLC is a for-profit company.
Okay.
We had some 7 participants, 7 companies. Each company invested $1,000.
Okay.
So the nonprofit of the National Association of Blacks in Solar did not pay them, but each one of us, I'm president of Positive Change Purchasing, we invested $1,000
Each.
and we had 7 other companies that invested $1,000 to pay the grant writer. That way we were able to go after the grant in a short turnaround time.
So, yeah, I understand that. So that is just as simple. It's just as the same thing as you wrote your check to the not-for-profit. So the not-for-profit can issue you invoice, receipts for donations, and that is what you, the for-profit company, will write off.
In other words, the National Association can write a receipt for each one of those companies.
Absolutely.
That donated money, and they can take advantage of that money that they kicked in for their portion of paying the grant writer.
Absolutely.
Thank you very much.
Yes.
Excellent.
So do we have any more questions?
Yes. What are the tax benefit of S Corp compared to LLC? I believe that is a single member LLC.
So S Corp, single member LLC, no, single member, well, LLC, let's just leave LLC, limited liability corporation. Let's leave that as an entity, and let's take corporation, S Corp corporation, as another entity. Difference, okay, single member LLC, whatever you do, everything flows to you, so you pay one tax. And when I was talking of self-employment at that time, all of that comes through at that time. If you actually, those of you that have been filing, if you look at your Schedule C and all the adjoining schedules very well, you will see a portion of the tax that you are paying as self-employment tax. The taxes flows through to you and you pay it once. Now, if you are a corporation and it's an S Corp, a small corporation, small corporation in itself don't pay taxes. But you, as an owner who has placed yourself on income, you're getting W-2, for example, taxes are being withheld from your income. However, whatever is left in the net income after your salary has been deducted and all the expenses for the S Corp has been deducted, whatever is left will go to the owners or the members, whether it's just you or it's 100 of you, it will go to you in form of K1, and then you will pay tax on that amount. So if you've heard people talk about double taxation, that is where that comes from, because you pay tax on your payroll and then you now pay on the excess money that is left for the company that is being, distributed to the owners. Whereas with LLC, whatever you do, everything flows to you and you pay your tax one. Now, I remember I was saying earlier that you have to know at what point I don't know if I can use the language, break even now. So when you are just starting, it's okay to start as an LLC. When you're really not making, your net is staying under X amount, 5,000. I mean, less than 40,000, 30,000. I would stay as an LLC. But if I begin to make 100,000, 200,000, and I'm a single owner LLC, I want to think of restructuring my business, because sometimes that 15-point-something% you pay on self-employment tax before your income tax can be telling. Whereas, yes, all of the money are coming, or everything is coming from you, however you look at it. But I think it becomes a lot more, you have a lot more cushion as a corporation, as a C corporation versus LLC, single, or as a sole prop, which is basically what it is, if you're making a lot of money. The IRS will know there is a limit you get to, and then they will force you to when your revenue gets up to a certain level. But on your own, if you look at the tax benefit, depending on the state you live in, you want to convert it before you start making a whole lot of money. That will help you save a whole lot, because you're paying yourself, you're paying whoever is employed in the company. All of those are business write-off before you get your K1. And when you get your K1 and you now file, you are just filing and paying only the income tax. You are not paying the self-employment portion of that money. That is when it becomes really advantageous for you.
Excellent. Well, two more questions. So are there any tax benefits for working from home for W-2 workers even if they are renting and not paying mortgage? And talking about mortgage, Mr. Edward, I'll be remiss if I didn't ask you that what are the tax benefit of home ownership?
So benefit for W-2 workers working from home. Well, W-2 worker is W-2 worker. Thanks to Mr. Trump, I don't really see your tax is your tax and is already deducted. If you withhold less, the simple answer is you will pay the IRS. Right now, W-2 workers, you don't really have any tax write-offs, pretty much. You don't have. Back in the days, people used to be able, let me say, what was the name of that form? I've forgotten the name of the form, 1053 or something, that you could use to which people were abusing and made Trump to end that form. So if you're a W-2 worker, you really don't have deductions other than your standard deduction, period. So whether you rent or you have a mortgage, you can't really just deduct that. But now, if you rent, but if you have a mortgage, the tax advantage, answering your question, Benga, your mortgage interest, your property taxes, that's your property tax for the house, you can write off, you are allowed to write off. Although, again, thanks to Mr. Trump, prior to now, there wasn't a cap, but now we do have a cap of how much of your taxes and interest you can write off. But at least if you have a mortgage and you pay over $10,000 or under $10,000, you can write off everything and it's okay. Again, the other thing I want to talk about with the tax benefit of having a mortgage is this. So you have a mortgage and you bought the house 4 years ago for $200,000. And because of the way we experience the boom in real estate market now, your house has increased in value. Not even because you paid it down, but because the value just rose overnight. And now your house is worth $550,000. This is a house that you bought for $200,000. So if you were to sell the house today, you will make $250,000. The law is for a house that you have lived in 2 out of the last 5 years, as a single person, you are allowed to keep $250,000 without paying taxes on it. If you are a married couple, $500,000 is excluded from your taxable income. I tell you, for those of us that own business here, there's no other business you will do and make $200,000 and they will tell you you can work, don't pay anything. Only in real estate.
Wow, wow, that is eye-opening. I have put Mr. Edwards' contact information in the chat box to follow up with him. Can we all give a virtual round of applause of appreciation for Mr. Edward for the generosity and his expertise that he has shared with us today? Thank you. Thank you. Thank you so much. And before we all go, I'm going to ask you to stay with me with 1 more minute. Quickly, I want to talk about our upcoming events at the Nigerian Center. 1 minute. Our upcoming event at the Nigerian Center. Next week, we have a documentary screening coming up as a live screening. It's 3 families' journey to America through asylum, and it talks about their transition, and our organizations like Nigerian Center, the Welcome Center in Indianapolis was able to help them. We're also going to be talking about resources that are available at our immigration legal aid programs. For those who want to learn to speak Igbo, we have registration open. Yoruba as well, we have registration opened. For those who want to get involved in the work that we do, you can catch the replay of all the programs that we have, including this one, on our media page on our website. Please email us for volunteering opportunities if you're interested to serve with us. Consider being one of our community partners. These are grassroots organizations and community leaders that gives us insight into how to pivot our programs. If you're not following us on social media, please follow us on Facebook, Twitter, LinkedIn, Instagram, and YouTube. The handle is Nigerian Center or the Nigerian Center. Donations, please consider donating to Nigerian Center if you have not yet done so. I particularly ask that you consider becoming a recurring donation so we can continue to do the work that we do. That said, I want to thank every single one of you for your time today, and we are all released into greatness. I'll see you all very soon.
If you don't mind, I just want to say that our office is open. If you don't currently have somebody that's working on your taxes, you have our address and our contact on there. You can also give us a call and we'll be ready and happy to work with you. Thank you very much.
So do you only work with DMV folks, or you can work with folks nationwide?
I can, with taxes, I can work with folks nationwide. With mortgages, I can do DC, Maryland, Virginia.
Excellent. I'm going to, one more time before I go, I'm going to put the address back on the screen. if you go to your chat box, please get this information. And we say thank you for your time. Thank you, every single one. Once again, we are all released into greatness. I'll see you very soon. Bye for now.
Thank you.
Thank you.